The stock market has seen a nice rally this week. We had a really nice up day yesterday, and Monday was somewhat of a flat day. It was slightly positive, but it's good to see that stocks really went up yesterday. And it looks like today is likely going to continue that rally because the consumer price index report came in and inflation is, I think, under control. The Fed's goal of getting inflation down. I think they're accomplishing that goal. And now CPI is under 3, which is really good. I think their goal, their mandate, they have a dual mandate. Try to keep inflation at 2% and try to keep unemployment down. Now, meanwhile, the consumer price index is headed in the right direction. Far, far better than what we were seeing a year and a half ago when we were seeing inflation at 9%. I mean, that was just terrible. But the unemployment is going up. So that's the other economic indicator that we got to keep our eye on. Unemployment will lead to recession, and that's bad for the economy. 70 or 75% of the US economy is consumer spending. So consumers, if they get scared and they stop spending, it's going to affect a lot of companies. So overall, it's a good day for the economic news. And I don't think if we get to a recession, I don't think the recession is going to be all that bad, just because it's setting up in a way where it would be I'm going to call a soft landing recession, where we have a technical recession that does affect some industries more than others, but it shouldn't be prolonged. It shouldn't be really bad, and we should be able to recover quickly. So as we look at the NASDAQ, the 5-day, it's up 3% over 5 days. Specifically this week, it's up about 2.84%. That's really nice. If we look at the monthly, it's still down about 7%. The NASDAQ officially corrected, and I think it took medicine that it needed. The medicine being some of these high flying, high appreciated stocks were just going up and up and up. And that's just not sustainable. At some point, those stocks will correct. And they took some medicine, and the market corrected. Now, semiconductors specifically, it's been roaring this week. It's been going up really fast. So we may end up, seeing that sector, that industry, I should say, correct it's in the future again. But we'll see. It's the stock market. It's tens of millions, maybe hundreds of millions of participants that cause the market to go in one direction or another. We'll see what happens there. So for the rest of the week, and really setting up for the remainder of 2024, I think there's opportunity for gains. I think it's smart to go into sectors and industries that are probably going to do well for the latter half of the year. We can talk about that on this live stream. So it's great to have everybody join. Shadow Guy, really appreciate you joining. Good morning. Hopefully you are having a good day. And then best of, thanks for joining. Appreciate it. I had a couple of stocks in mind that we can talk about that announced earnings, as well as made some news. And please suggest stocks that you want to cover, or maybe topics that you want to cover on the live stream. So one stock that made a lot of news yesterday was Starbucks. Let's start there. So Starbucks replaced their CEO. And now I usually don't invest in companies based on their management team. I think if it's a really good business, it's a really good business. And the management team is a plus or a minus, but it's not the fundamental valuation of a company. I had been buying into Starbucks. I thought that the company was discounted. The reason for it is it's the number one premium coffee restaurant / consumer packaged goods / retailer in the US, and growing internationally as well. So that's a really strong brand. And I really believe that it was being underappreciated It had really sold off, especially under the pressure that this old CEO, I guess now the outgoing CEO, was under after the last earnings. And I just saw an opportunity. So I jumped in and bought up as much as I could. And I'm glad I did so because I had a nice day yesterday. I made almost $4,000 on Starbucks. So it was nice. My wife and I celebrated. We went and got Starbucks yesterday. I usually just make a coffee at home. All right. So I think the new CEO definitely has industry experience. He was the CEO at Chipotle and is probably going to come in. And if anything, just obviously he's already changed the market perception and sentiment around the stock. I think the market very quickly realized, yeah, this is Starbucks. This is a Starbucks. If you compare Starbucks as a restaurant compared to other restaurants, their profit margins are far higher because making coffee is simpler. If you go to a restaurant and you have to make, let's say a plate of delicious food, a steak and the sides and so forth, you have to hire a number of people in a kitchen. You have to prep those ingredients. You have perishable ingredients. You have all those things going on as a restaurant. Starbucks doesn't have a lot of that complexity and a lot of that risk. Here's what I mean is coffee beans are not as perishable. Their staff, they do have to have a number of people, but they're usually very, very active. The utilization of that staff is usually really high. In fact, they had a shortage of employees for a while, and I think they take care of their employees for the most part. For the type of job that they provide, I think it's a pretty good experience for employees. But I think the market realized very quickly, hey, this is a valuable business. And now if we hated the old CEO, okay, he was removed from the equation, and now we got a CEO that we like, boom, the stock popped 24%. So very quickly, the market adjusted to where I believe the stock was really, truly valued. If you look at the value of Starbucks based on their free cash flows and their expected earnings per share and the type of company it is, I don't know that I have the most current stock price. Let me double check. 95.90. So 95.90. So now I have Starbucks selling at a premium of 9%. Just the price moved really fast. Overall, I'm going to hold on Starbucks. And the reason for it is I'm really trying to accumulate, as soon as you see a company operate in this green quadrant, if you watch my videos, these are companies that have a strong moat, competitive barrier. They just have number one leadership position. They're growing. They have momentum. They have all those attributes that I'm looking for. And Starbucks is in the green. And I mean, the evidence is that with regards to coffee restaurants, they are number one clearly. They really don't have a rival. It isn't like Coca-Cola and Pepsi. It's not Ford and GM. Those are rivals and they're very comparable. Starbucks doesn't have a competitor because they've been that good. They've grown that well. They've established themselves and their brand is second to none in the premium coffee market. So I'm trying to accumulate companies, as many of them in the green, where I can get them at a discount and then hold them. So we're talking about Googles and Metas and Ubers and companies of that type. I put oil companies in the green because oil companies operate in an oligopoly, which is, just a few players that control the whole market. And that's definitely the oil business. So that's what I'm trying to do with Starbucks. I'm glad that this stock really responded to that news. It kind of makes up for the disaster that is Intel, right? I have Intel. And although Intel's had a good day yesterday, it's had a horrible last couple of weeks. Their earnings release was horrible. So I took a hit on Intel and the market came back and sprinkled some good luck on Starbucks, and I'll take it. So Starbucks had a good day. Looks like Kiter, sir. Home Depot reported. Still, Home Depot did not drop, actually up 1.5. Interesting. Yeah, let's cover Home Depot and go over that stock. I think it's a good one. David, uh, very nice for you to tune in. Nike's up 8% this week. And, I've noticed that. So let's take a look at Nike because Nike is one of those other companies in the green. I think Nike is far and away the number one athletic footwear, athletic apparel company in the world. I don't know that anybody's going to argue a whole lot against that. And you don't get to number one by doing a terrible job and customers not liking you. You get there because you made hundreds, if not thousands, of really good decisions. You've executed really well. You have very good products. You have a different, you have differentiators the market recognizes. And I believe that Nike is that company. So we'll go over Nike. Mr. 123 Cheetah, good morning, sir. Hopefully you are having a nice day. Let's take a look at SOFI. SOFI is a popular stock, and I'd be happy to talk about SOFI. Take a look at it. I'll give you my thoughts on it. I think a comparable company to SOFI is New Holdings, although they operate in Brazil and other Latin American countries. New Holdings had their earnings, so we can kind of look at those two together. Earthbound Misfit, good morning. Hopefully your day is going well. Let's take a peek at the stock market real quick and see what the heck's going on. So the futures market, it is flat. It's going to be a flat day. Now, I'm good with the stock market, being relatively even keel for a week. We had 2 weeks that were like a pretty heavy load. It was super interesting. I just couldn't imagine going 12 months with that type of load. We had 2 weeks ago, we had huge earnings from these tech giants, and their earnings were really interesting. And what was also interesting was the market would sell off. Like Meta came out with their earnings, good earnings, sold off. Google Alphabet, good earnings, sold off. Amazon, good earnings, sold off. And it was like, what the heck? What's going on with this market? And then you had the Japanese market tank on Monday of last week that just drove the stock market down immediately. And then the market came back in the late days of the week last week. So it was like, holy smokes. It was quite interesting, but it'd be nice to have a week where it's not all that interesting. We just see stocks rise. It's like, all right, cool. Let's catch our breath and make it through the rest of this year. Looks like the Family Guy has tuned in. Very nice to see you. So do I hold XOM, which is ExxonMobil, or Occidental? I do not. I hold Chevron. I like both Exxon and Occidental. I don't want to own a bunch of stocks. I own like $120,000 of Chevron. I'm good. I'm good with oil. I don't need to buy another oil company. I think Chevron's a good company. They pay a good dividend. But if you look at it from an appreciation standpoint, Exxon, I think, has performed better. And Oxy is Warren Buffett's favorite oil company. So you'd be in good company if you invested in Oxy. Oxy, I don't know if they pay a dividend, but they've been appreciating really well. So it's a smaller oil company. And I don't know that they're completely vertically integrated. Like Exxon and Chevron are fully integrated energy companies. So they go find the oil, they extract the oil, they put the oil into a refining process, they refine it, make it a petroleum product, then they sell it, gasoline, diesel, lubricants, all kinds of fertilizers, all kinds of stuff. They also are into natural gas. Oxy is not fully vertically integrated, which is good and bad. In times when it favors them, they're going to go up way faster than Exxon or Chevron. But Exxon and Chevron are almost diversified enough where they can weather bad periods quite well. So I'm good with Chevron. Both of those options are good if you're looking for a good oil play. Oil prices did go up in the past week or so. The tension in the Middle East is driving higher oil prices. And when oil goes up, cash flow goes up for Exxon and Chevron and Oxy because they get to sell their oil at a higher price. Easy math. So that's my comment there. What are your thoughts on DOJ considering breakup of Alphabet? Glad to talk about that because it's kind of, let me talk about it really quick, and then we'll move on. So the Department of Justice concluded that Alphabet's search business is a monopoly. I don't think a lot of people are going to argue with that. Yes, it's so good, it's could be considered a monopoly. I don't think it's a surprise to anybody. Now, if we look at the Microsoft situation that they had to go through like 20, 25 years ago, maybe 30 years ago, they were deemed to be a monopoly because they controlled most of the operating systems on the desktop, a majority of them, and were able to then control how PC makers would install apps and have kind of like preferential treatment for Microsoft products. And the Department of Justice, went through and started to somewhat control Microsoft, but those controls, I don't think ever kind of held Microsoft back. Now, it's kind of good news. I'm looking for companies that resemble monopolies. I do, because monopolies, they kind of show that company's so good, it drove all its competitors out of business. Now, doing it fairly and on merit and on intellectual, kind of talent and so forth, that's the right way to do it. Google certainly did that. Google was founded by two guys who graduated college, Stanford graduates, and they had this crazy idea of refining and perfecting search. And other companies saw it and said, yeah, good luck with that. There's no money in search. So back then there was like 10, search engines. Nobody really focused there, but the guys who started Google really made the best search engine on the planet. And they got there on merit. And once they got there, they were able to monetize it and really start controlling the search results and selling AdWords. And that just became such a valuable business. So the Department of Justice just concluded what I think everybody else knew, that, hey, Google's so good that you could see them being classified as a monopoly. Done. Now, how are they going to control Google search? The people that spend money to advertise on Google, they've built their businesses by advertising on Google. And they're going to be careful if the Department of Justice came in and said, well, Google, you have to try to allow other players into the market and to compete for the advertising spend. Yeah, that's fine. Google can follow those rules. But if we just talked about Nike, and you want to be there on top search results when somebody says, what are the best shoes to wear when I'm going to be running a marathon? Well, most definitely Google is going to want to spend their Nike is going to want to spend their advertising dollars on a platform where they feel they're going to get the best return on investment. And I just don't see that companies are going to go away from Google. So the whole breakup of Alphabet, they're not going to break it up. What they're going to say is that you cannot be so dominant that you have to leave the door open to competitors. So they will do so. They'll leave the door open and say, hey, if competitor wants to walk in that door and compete against us, go for it. But the U.S. is not built on, kind of central government saying what's going to happen. No, the U.S. economy is built on people like Henry Ford, building his automotive empire and saying, hey, I'm going to go create a car that's affordable to the average person, and created the Ford Motor Company. And I could tell you 100 stories similar to that. So the spirit of the U.S. capitalistic, entrepreneurial based, creative based economy, that's not going to leave. And I don't think this is a giant risk for Alphabet. It's just a reality. And we have other situations specific to technology that we can refer to and say, Microsoft's either number one most valuable company on the stock market or number two. The whole DOJ thing didn't really hold them back that much. It just kind of concluded what everybody knew, that Microsoft is dominant in the PC market. Welcome to reality. And their products are dominant on the desktop. Now, you could see some of Microsoft's behavior, like they drove Netscape kind of out of business. You could see that was clearly kind of crossing the line, and Google hasn't done anything like that. So that's my thought on that. We'll see what happens. Unfortunately, believe volatility is going to return. Personally, putting good chunk into T-bills before Drake. Yeah, very good idea. So interest rates are going to go down. I don't know if they're going to go down like a ton. Like right now we're earning 5% on cash. Maybe we're going to start earning 4% on cash in about a year. So they're not going to drop down to like a couple of years ago when they were like close to zero and you were earning 0.5% on cash. So it's a very good idea to lock in interest rates on T-bills. Just be careful with long-term bonds. And here's the reason for it is, I happen to think that my best vision can kind of, it's pretty accurate for the next 2 years. Like where our interest rate's going to be for the next 2 years. They're probably going to be 4%-ish, like right now the interest on cash, 5%. Home loans are coming in about 6%, give or take a couple percentage points. That's with good credit, standard loan. And as we operate for the next 12 months, I think the interest rate is going to go down 100 basis points, which is like one full percentage, going from 5% to 4%. I can kind of understand the next 2 years. I could probably guess somewhat accurately for the next 5 years and say, well, in 5 years, based on the economy we're in and so forth, I think we're going to be around the same rate environment, maybe a little bit lower, 4%, maybe drop to 3.5%, 3%. Maybe it goes up to 5-6%. But beyond 5 years, it's really hard to really know what the heck's going to happen. Having said that, I've seen some comments where people want to buy or are interested in bonds that are maybe a 15, 20-year bond. And man, that is outside my expertise. That is outside my vision. And the risk there is if you have a long-term bond and rates begin to rise, those bonds lose a lot of value. Now, if you're sitting on long-term bonds right now as rates drop, you're celebrating because the value of those bonds goes up. So be careful. Just understand what the ramifications are. If rates rise in the future and you're locked in on long-term bonds, your bond value is going to drop. And be careful with that. But it is a good idea to lock in bonds. You guys have seen my bond ladder on my channel. My bond ladder kind of takes care of cash flow for my family for the next 5 years, and then if the economy surprises me, I'll have to figure it out, but I have 5 years to figure it out. Family Guy, do you have any companies that store oil like Phillips 66? I don't. And I think you're talking about midstream, and midstream, a lot of them are partnerships, limited partnerships. And I've looked at them. The thing that I would say is those tend to go up or down and have short-term moves. They also pay really good dividends, and there's a different tax ramification when you invest in those. But I would say that long-term, I don't see like the perfect investment is you buy, you hold it for 10 years, your rate of return is 10 to 15% on that investment. You wake up 10 years later and that stock, let's say you invested $10,000, 10 years later, it's worth $30,000, $40,000, $50,000. That's what I'm looking for the most part. And I don't think the midstream companies ever deliver that type of result. So if you're looking for a short-term, trade or investment, hey, looks like it's a good time to buy, make some good money for a year. Just make sure you define that exit strategy. Hey, if it gets up to this value, then that'll be a good gain and I'm out. Because I don't think they deliver long-term appreciation events like a different type of company. So good luck with that. Yeah, so there's a lot of things that they're saying spinning off Android and Chrome. And again, if you look at the Microsoft example, they were similar headlines and so forth, but you can't really separate them. Like they were all developed to feed off of one another. It's a company. It's like going to Ford and saying, "Hey, Ford, you guys are too good, so we don't want you guys to make transmissions. Somebody else has to make them, and you have to sell your cars without transmissions." Yeah, right. It can't be done. So, you're hearing headlines, and remember, it's news, right? And the news agencies, they want to get eyeballs on their, screens. So they're going to say things that are like, "Oh my God, Alphabet's going to be broken up." It's not. It's going to be a case where first, it's going to move really slow. And second, the Department of Justice is going to say, okay, you're a monopoly. We don't want you to do this. We don't want you to do that. And if you are, the Android operating system is sold on a lot of smartphones. I think more smartphones than the Apple iOS, because Android runs on Samsung. It runs on their own device, Pixel. Everything that's non-Apple runs Android pretty much. And Microsoft has a tiny bit of market share, but it's Android versus Apple iOS. Having said that, it's just now we're getting into AI. And in fact, our friends at Google just released their Gemini on their Pixel phone. And this is the first delivered AI product to the smartphone, right? In mass. And I think Samsung did something, so I'll take that comment back. But Gemini is one of the big large language models, and this is going to be one of the big ones. This is the one that competes against ChatGPT. This one was kind of there before ChatGPT, but ChatGPT just accelerated their deployment and it got there. This is huge to me. So Google is one of my big positions. I own a fair amount of Google, or Alphabet, I should say. So I own $143,000 of Google Alphabet. So I believe Google Alphabet stock is one of the best buys for me in the current time. I think the company is very strong, getting stronger. They have the right chess pieces on the board. AI, they got it. Search, dominant. YouTube, dominant. YouTube is now the number one streaming platform in the world. Number one. And it keeps growing faster than Netflix. Reason for it is guys like me and probably more talented, more interesting people are creating content on their own and putting it on YouTube. YouTube gets to show it. YouTube then advertises or has subscriptions that are sold on YouTube. Just such a great business model. They have their Google Cloud business, which is growing faster than the other hyperscalers. And they've got the robotaxi, autonomous driving company in Waymo, as well as other bets they're having. So when you look at Google Alphabet, it's just such a loaded company. And I continue to buy shares. Every down day I've been buying Google, and happy to do so. I think it's going to be potentially the most valuable company on the stock market at some point. They're not doing too bad. They're up above $2 trillion of valuation. They've had a good rate of return. But with regards to the big, massive cap companies, they haven't been number one. NVIDIA's been number one. Meta's been number two. Google's mixed in there at between number 3 and number 5. Tesla's been the worst of that pack. I don't think Tesla belongs in the Mag 7 conversation anymore. I think Eli Lilly belongs in that conversation as well as other companies. So needless to say, I'm big on Alphabet and think the noise we're hearing around the DOJ. It's going to be a lot of that. It's going to be noisy. But again, we've got a pretty good example in Microsoft that happened. Microsoft wasn't all that interrupted by it. So look at ARLP. We can look at that. All right, so let's get rocking here. So let's start with, I think Home Depot came up. And Home Depot is a kind of a barometer stock. Home Depot kind of tells you a lot about the economy. And I believe, let's see. So I'm not seeing a big, did they already announce? So August 13th. Yeah, they announced yesterday. So I'm not a Home Depot investor. I just don't see a tremendous opportunity with them. Their growth isn't, the company isn't growing. So that's always, I always have to pause with a company that is not growing. Why are they not growing? Is it, they have a product that isn't all that great anymore, that there's not a lot of demand, the perceived value isn't there, quality problems, what's going on? And the fact is that Home Depot is not growing. I think some of the problem is that during COVID or after COVID or during the COVID shutdowns, people really invested in their homes. They remodeled kitchens, they made their home much nicer. And they probably bought forward a lot of the demand that they're now struggling to find, homeowners that want to put big dollars into their homes. So I think that's part of it. Now, overall, when I value the company, I can't get to their valuation because their cash flow doesn't really amaze me. It's a good cash flow rate. They've grown it over time. Let's call it 18 billion, and it's not growing, which is a big part of my valuation. And if I take 18 billion, multiply it times 20, I get to like $360 billion. Just a slight discount, but that's if it's a growing company. If it's not growing, I'm probably around 240 billion. And that's just not, it's not going to do it for me. Now, Home Depot most definitely has a lot of competitive advantages compared to other companies. Their biggest rival is Lowe's, but I think Home Depot's out operated Lowe's. Home Depot pays a decent dividend, but overall, I just don't know that Home Depot is going to be worth, a whole lot more in 5 to 10 years. If it's worth about the same amount in 5 years, it'll kind of be dead money, so to speak. And, retail is always a tough business. Retail, high lease cost, employee cost, you have theft. Just go down the list of things I don't like. So I'm not a buyer of Home Depot. I think it's a decent investment. It's a high quality company. Somebody really understands this business and thinks that, hey, the economy for home improvement is going to be better in the future, especially in 2025. Hey, this might really benefit that investor who, sees appreciation because, that person saw it right and made their investment. So Home Depot, I think, is there. It's not doing all that great. Market's open. It's open 5%. What's the market doing from? So the S&P's up slightly, Nasdaq's up slightly. It's kind of a flat day, but it is on the positive. So Home Depot's out there. Good company, just not a overly exciting investment in my opinion. Now our friends at Nike, these guys have been getting beat up pretty bad. And yesterday, the stock rose nicely. Look at that. Nice. Over the last 5 days, it's up 6.7%. Over the last month, it's up 9.27%. Year to date, remember that big drop in Nike? And I owned Nike here, and then it dropped, and I bought more. I really looked at their numbers. I looked at their situation. And I bought big when it dropped like this. Nike is clearly one of the best companies, operating in the U.S. economy. We had the Olympics. How many athletes use Nike, partner with Nike? It's just a really respected brand. they have an advantage against their competition of, if you think about retailers that put footwear on their shelves, they probably really focus in the footwear department. It's Nike's department within Dick's Sporting Goods or Kohl's, or you name the retailer, and Nike's one of those key uh, vendors for them. So they have a lot of the shelf space kind of covered, and it won't go away. That retailer knows where the money's at. Nike is clearly the brand that, whether the consumer is going to be 52 years old, 42 years old, 12 years old, 22 years old, Nike is, across the board, a very well-liked brand across all categories. So I thought it was a really good investment. I continue to buy into Nike on down days because I think Nike is a company that really is in the green. It operates in the green. Their brands, their partnerships, their supply chain, their network effect, all those things have made them far and away the best athletic shoe company in the world, and athletic apparel as well. And they're now taking market share from companies like Lululemon in certain categories. So I like Nike and will continue to buy into that stock. I do have them at a slight discount, not a huge discount. These really good companies, it's hard to find them when they're highly discounted. Nike, I actually have a nice discount there, but I don't think I have the most current stock price. $77.94 is the current stock price. Yeah, so I still have Nike at a really good discount. So I'm going to keep buying Nike. It's kind of one of those things where they're just going to keep getting more and more valuable. And you look at their market cap, right? 117 billion, right? Like Google Alphabet, I just talked about that. It's like $2.2 trillion. And these guys, they produce really good cash flow. You look at the cash flow that Nike produces, very good cash flow. So, and they're growing that cash flows over time. So I'm good with Nike. I'm glad I bought more shares when everybody hated it because I got them at a discount. So that is Nike. All right. So you guys wanted to talk about SOFI, and let's talk about SOFI. And as I talk about SOFI, and is this the right one? Yeah, this is it. So, so SOFI is one of those stocks where when I value it based on the normal valuation methods, the same methods I use for like StoneCo, PayPal, or even New Holdings, it just doesn't show up to be worth $7 billion. But it's not that type of investment. It's an investment where if you believe SOFI is going to be the next, fill in the blank, and it could be the next PayPal, because PayPal in its glory days was just such a well appreciated stock. Right now it's kind of repairing itself. But if you think this guy's, if SoFi could be the next Robinhood, which has been doing really well, then that might be worth, making a bet on it. But you're not going to get there through valuation. And the reason for it, it's a $7 billion company. And if my memory serves me right, see, the free cash flow just isn't there. But it's moving in the right direction. From burning $7 billion to only burning close to $3 billion. That's a lot. That's like a lot of cash burning, by the way. You look at the balance sheet, they don't have a lot of cash. I don't think they have debt. They do have long-term debt. So, yeah, I'm not an investor in SoFi. They're burning a lot of cash. They don't have a lot of cash. So where are they going to find the next cash infusion? Are they going to have to issue out more shares? That's going to be the question to ask. The stock's down 21%. Okay. Now, I think what they offer is likely a financial product, financial solutions that make a lot of sense to probably the younger kind of population. I get that. But you need to make it so that you make money. If you look at Robinhood, that's a stock that I own. They are generating free cash flow. So why is SoFi not generating free cash flow? That's the question that I would that keeps me from investing in SoFi. So SoFi is not an investment that I would make. I think new holdings might be a little more my cup of tea. Let's take a look at that really quick. Although I'm not a new holdings investor, I'm an investor in Robinhood, which could be part of this, ecosystem. Coinbase, PayPal. So those are the three stocks that are in this zone, so to speak. So new holdings is 61 billion. They operate down in Latin America, Brazil, Mexico, Colombia, Argentina, Uruguay. And this is kind of a new generation bank and financial services company. I believe they are growing real nicely. Yeah. Their revenue growth is amazing, like doubling their business every year. Amazing. And cash flow wise, they do produce free cash flow. They don't produce loads of free cash flow, but they produce free cash flow. And the difference between new and SoFi is these guys are not burning cash. So it doesn't become a big risk factor where if you run out of cash, how are you going to operate your business? It's going to be very hard. So these guys are generating free cash flow. They're growing their business. So if you value new holdings based on their earnings per share, 10 analysts cover it. They say the company is fairly priced with a small 3% discount. And that's because you're looking at earnings per share, and earnings per share is growing over the years. They're probably in love with this revenue growth, which I think is super impressive. Look at that. They're going. So this company was $612 million in revenue. And now they're for 2023, they were $8 billion. Very nice job. Very nice job, New Holdings, to grow a business from $612 billion to $8 billion. That is phenomenal. Very nicely done. And they're going to keep growing and keep growing and keep growing. I'm not an investor that just looks at growth and says, I want that company at some point, it's going to be worth a lot of money. To some extent, I look at revenue growth. It's a very important indicator. This means that New Holdings is in the right markets with the right products. Customers like them so much that they buy more products and more customers become a part of their ecosystem. So this is a good company. It just hasn't really been valuable enough to replace Robinhood, Coinbase, or PayPal. I'm good with those three, and I've got, I don't know, about $120,000 invested in those three that I named, or the value of those stocks is around that amount. I'm good, but New Holdings, I could totally understand. I think Scott, with Scott's due diligence, had a very favorable opinion. If you want to see a really good video on New Holdings, go to Scott's due diligence. He has a great video on New Holdings. So those are my comments on SoFi, and I hope you found them interesting. Good luck with that. Let me catch up on some comments here. I have KMI, HSM, both transport oil and gas pipes. They're not partnerships. Regular dividend, high dividend. KMI have for years. Dividend works well, 7 to 8%. Beautiful. Hey, thanks for that note. And Kidder, making it happen. Thank you, sir. So there you go. Transports, that looks good. That's a really nice dividend rate. So if you're looking for income, really good idea. And I'm going to take a look at those let's take a look at those real quick, because those are good suggestions. So HESM. All right. So Android PC, the markets don't seem impressed with the new CPI results. So, well, we had the producer price index yesterday, and that showed that, hey, inflation is going down. This one somewhat kind of reflected the same conclusion. And we had a really good update yesterday. So the market's probably like, okay, inflation is where we thought it was. How much more can it rally? I don't know. I think what's good about the talk about recession and a nice correction on the NASDAQ is that the market can pause, kind of like, hey, we had a really good update. Let's pause, figure this thing out from here forward. If we had a down day, it wouldn't be the end of the world because we already had an update this week. So I think just, if anything, it's kind of comforting to know that the stock market isn't just going to jump up every day. That's when it becomes a little too irrational, exuberant. If it just keeps going up and up and up, it just becomes too risky for a big crash to come. What about Chipotle Starbucks CEO swap? Yeah, we covered that earlier. And it is crazy that, I don't think they gave the outgoing CEO a lot of time, but hey, when you're CEO, that's the kind of stuff that happens. And the CEO coming in, I mean, it seems like he did a good job at Chipotle. So it caused a big splash for Starbucks. All right, so let's talk about KMI. Kinder Morgan. Yeah, I'm familiar with Kinder Morgan. So Kinder Morgan, over the last 5 years, your rate of return on appreciation perspective, 5%. They pay 5.5% dividend, and this is operates energy infrastructure. Yep. So this is an example. You avoid getting into a partnership, which is good because then your taxes are far simpler. Pays a nice dividend. You just don't see crazy appreciation. Like, I want to see appreciation like, let's go with, so like Meta over the last year is up 73%. If you look at, even with a massive correction, you're up 189%. And if you bought in 2022, you're up 484%. So I want to find more Metas. I want to find more Ubers. And when we talk about midstream energy companies, I don't dislike them, but I want to find the next Uber where I can buy it at, $21 a share and then watch it go up 232%. Where could I find the next Uber? Where could I find the next Robinhood that, investors just totally sold this thing off, said, yeah, this thing is worthless. Let's sell it off by 87%. It's worthless. But if you look at the 1 year, no, actually it's worth a lot. They have a very good business for younger investors that are not completely indoctrinated in the old school way of investing. So when we talk about, the stock market offers thousands of stocks. We don't have to buy one specific type. We can buy stocks that we understand, like I individually understand. I understand those companies, and then I can go pick the best ones. It's like having a garden. If you can plant a certain type of vegetable that you love to eat, 2, if you go to the grocery store, they want to charge you a lot of money for, why not plant that vegetable versus a vegetable that, I can go to the store and buy that for almost nothing. And it takes a lot of effort to grow that vegetable and so forth. So that's why I have one oil company. I'm good with that. It's a steady investment. It pays a really good dividend. It's part of my income portfolio. And I don't want to buy any more than that. But that's my portfolio based on the needs of my family. And that's my comment on that. So, but I'm really glad, Nkiter, that you put that comment out there. A lot of the midstream companies that I was familiar with are these partnerships. I'm glad you brought up that comment and clarified and actually corrected my statement, which is, no, there's actually some that are full-blown stocks. You don't have to buy into partnerships. So this is Alliance Partners Diversified natural gas resource company. Diversified natural resource company produces and markets coal primarily in utilities, industrial users. So electricity companies are on fire. And these guys over the last year, that's a really nice rate of return, 17%. Very good. Over the last 5 years, 33%. So they really went up. When we went into COVID, they really dropped and it's really risen. They paid, wow, look at this dividend. Holy smokes. 12% dividend. What is going on here? So you got a 12% dividend. We've got trailing 12 months of revenues down. Might be commodity driven, but I would think that their commodity is coal is used for they burn it and create electricity, but it's also used for steel. And I know that steel prices are low, so that might be why commodity prices are also low. And that might, when we talk about this company is they may be producing more units or tons of coal, but the price that they get in the open market is lower because the commodity is down. So I think that's probably why their revenue is down. But you look at their revenue here, wow, that's great growth. The reason for it is the compares in 20 were terrible. They went down 32%, and then they rose 19%, then they rose 53%. This is an interesting company. Let's look at cash flow. So they are producing cash flow. It's not amazing cash flow, but let's say they're a $400 million cash flow company. 400 million. So they're producing, they're producing a lot of cash flow compared to their market cap. It's about 12% of cash flow to their market cap. So they can afford this dividend rate. Very interesting company. That's a strong dividend. Analysts say it's a buy. That is one that I'm gonna put a little star next to it and take a look at it because I don't know that the demand on coal is going to go down. If anything, it's going to stay steady or go up because from what we're hearing is the era of AI is going to draw more power from the grid. And when you look at EVs, right, we're selling more electric vehicles. Well, they're going to need power. So you got more demand on power. Well, where's it going to come from? Between now and the time they build nuclear power and they get more solar power capacity installed on rooftops, as well as more industrial solar production, I think coal is going to stay in demand. So that might be a pretty good play. This would be one that, I wouldn't be, staying in this investment for 10 years. This might be a good year, 2 years, 3 years. This is a great dividend. It looks like they can afford it. And payout ratio is 69%. They've grown their dividend. That's pretty impressive. If you're an income investor, this is probably a pretty attractive stock. So thanks for suggesting that. I forgot who suggested it, but that's a solid one right there. There's always opportunity, no matter what market we're in. All right, so we went over. So there's one stock that I'm going to kind of give you a preview. I just created the video. I edited the video. I think it's coming out tomorrow, and that's on Live Nation. So we're talked about monopolies earlier in the stream, right? With Google, oh, it's a monopoly. Yeah, of course it's a monopoly. It's the freaking dominant search engine. But they got to that monopoly status by being the best. Another monopoly that hasn't been classified a monopoly yet is Live Nation. They control ticket sales for live events. And these guys have been growing quite well. And you look at their growth rate, they had a terrible 2020 because of COVID. But ever since then, they've just been growing. And you look at before COVID, they were $11.5 billion company. Now they're double that. So they've really have grown and they make good profit, good cash flow. I value the company. Um, I just did this valuation yesterday and I value the company at a 32% discount. Now, this stock, if you look at the year to date, it's down a bit. Look at the 1 year, it's doing okay. This is while the market's just been screaming up. And I just don't see why there's a big problem and reluctance in buying this stock. It's the number one player in their market. They are in a type of industry where it's profitable, right? They're selling digital tickets for concerts. And then once you get to the venue, they control that venue and they can sell merchandise and all kinds of stuff. And the growth potential is pretty high because you're going into the whole, VIP experience and doing better like catering, or catering is the wrong word, but once you're at an event, they kind of sell you a premium experience and you pay for it. So I'm just a preview to the video. This is going to be a buy for me. I'm going to look to enter a position in Live Nation. And, the way I look at it, I've been an owner of Live Nation in the past from a stock price. They've been called by the Department of Justice and been called a monopoly. And this is like in the last year, 2 years, and they've had to go to Washington, D.C. and defend themselves. No, we're not a monopoly. There's other ticketing platforms. And they have to admit, yeah, we're 90% market share leader. Yeah, we're really dominant, but we're not a monopoly. And Department of Justice is like, no, you are a monopoly. For me as an investor, I'm looking for monopoly-like investments where they're so good that they have few rivals. And they're so good that they get to grow their revenue and they get to grow profitably. They get to grow their cash flows. They get to use their dominance in ticket sales and then go into, VIP experiences at these venues. When you're a big artist, right? You're talking Beyonce, Taylor Swift, you name it, U2, you partner with Live Nation. That is the partner. There's no other partner. So there's no other, live act, ticketing platform out there that can get it done for you, especially here in the United States. So that's one of the tips I'll leave you guys with. It looks like, make sure I covered all the requests. We're going to go over one more and then we'll shut this down. NVAX, I think that's Novavax. So Novavax is a biotech company, pharmaceutical company. All right, sounds good. It's a $2 billion company. Wow, I didn't know they were that small. And over the 1 year, they're up 73%. Oh, man. Wow, awesome. These guys are rocking. Over the last 5 years, up 184%. But look at this. They were sky high, probably around COVID vaccine time. Hey, we got a COVID vaccine. And then, boom, they dropped. So let's take a look at the revenue. The revenue looks ugly because probably their compares because of the COVID years. I mean, look at when they said that, oh, man, look, they went from 18 million, 475, 1.1. Now they're smaller than they were in 2021. So the compares are really hard for this company. They did lose money. They're losing money. Okay. And are they burning cash? So boom, boom. They are burning cash. Why are they burning cash? So they're burning a lot of cash. Not sure what's going on, but I don't like when companies are burning a lot of cash. Are they developing new drugs? There's a lot of questions here, right? A company, a biotech pharmaceutical company, is only as good as their portfolio of drugs that are on patent, where they can drive revenues, profitable revenues. And you really got to investigate Novavax. For me, I'm good when it comes to healthcare. It's one of the categories that I think is going to be very prosperous for this year. I have these healthcare companies. I have Health Catalyst. I have Catalyst Pharma, United Therapeutics, Pfizer, CVS, and United Elevance Health, which is a healthcare payer. And from a small cap perspective, Catalyst Pharma is a small cap. United Therapeutics is a small cap, and they have really strong potential. Both of those companies generate revenue growth, free cash flow, profit, and growth. I like all those factors. Pfizer, I think, is going to be a good big pharma play for me. CVS is discounted, misunderstood, and I think over the next 5 years is going to be worth 2 to 3 times its current value. And Elevance Health is just a consistent appreciating stock, and I like Elevance Health in my portfolio. So that is it for this live stream. Thank you so much for tuning in. Everybody, enjoy. Let's see what we're doing here on the stock market. What's going on? It went negative. What's going on? We get a positive CPI report and the stock market sells off. It's probably because yesterday was so good. I mean, let's not get greedy here, okay? Last 5 days are still positive. We had a very good, Tuesday. So Wednesday, we give up a little bit of the gains. Not a big deal. Not a big deal. Just as long as it doesn't get all crazy and volatile. Volatility over the last year, we had crazy volatility when the Japanese stock market was melting down. But we're back to an elevated level, but not as crazy as it was on August 5th. So let's hope it stays there. Everybody, thanks for tuning in. Really appreciate you. Thanks for watching all the videos that I've got. Please keep the suggestions coming on videos. Tune into the live streams to talk about stocks. Everybody, I hope your portfolios are doing great this week, and have a really good day.